Hi, I'm Lisa Handley with Remax Advantage Plus.
Molly Kasel with Cardinal Financial.
Dominique. Go ahead, Dominique.
Dominique, we're Remax Advantage Plus.
And Joanne Thomas with Remax Advantage Plus.
We have invited Molly here today to talk a little bit about Fed rates and mortgage rates and how they correlate or how they do not correlate. So, Molly, you want to kind of start us off a little bit because, we hear the news. Everybody talks about, interest rates are going to go up because Feds raise the rate. What is the truth on that?
So when the Feds raise the rate, the direct response to that is prime rate. Prime rate usually is home equity lines of credit, credit cards, so that's when you will see that initially. So when we recently heard on Wednesday about the Fed raising the rates, it actually had a positive impact on our pricing, and we have improved for the better, in price, that might be one of my own words. We've improved for the better quite a few times between Wednesday and today, so
your rates have actually lowered.
our rates have actually lowered.
Rates have actually lowered even though the Fed's increased.
So bottom line is, the Fed's trying to do this to counter inflation because they don't want us to be in a recession, and they're trying to rename what an actual recession is, and there's all kinds of stuff going on. But bottom line, what you want to do is you want to make sure that you're comfortable with what your monthly payment is, and part of what impacts your monthly payment is going to be your interest rate. So take a look, put a little buffer in it, and get pre-approved and start shopping, because there has been a little bit of a change in the market. Or would you say that there's been a change in the market?
There's definitely been a change in the market. It's way more balanced. It's still a good time to sell because buyers are still looking. You guys, buyers are out there waiting for homes to come on the market. And so it's a good time to sell, but buyers, now's the time to jump because we've seen interest rates drop. And there's not as many buyers out there, especially in Minnesota, because we have such a short summer.
Yeah.
So people go out and enjoy their summer and aren't as apt to go out and buy a home. So instead of seeing 13, 15 offers, we're maybe seeing 1 to 3 offers, which is fantastic for the buyer. So it is a really good time.
Mm-hmm. Yeah, absolutely. And there's a couple things you can do too to get your payment in the ballpark of what you desire. So if you're not putting 20% down and you have mortgage insurance, there's a couple ways you can play with the mortgage insurance to get a more competitive payment or a better monthly payment that fits your home better. You can do upfront mortgage insurance, and that can be financed onto your loan, so that's a lower monthly payment for you for the long term. You could do it, build it into your rate. I don't know that I'd necessarily suggest that, but I can present it because ultimately it's not me who's making the payment, it's you. So I just want to give you the tools to see what you have, and then you can decide what's best for you as a buyer.
So what are you seeing? I know Dominique, you and I, for those of you that can't really see Dominique, but she is there. Dominique and I had a conversation about, what the mortgage rates are right now. We know it fluctuates so much, but what have you seen kind of the range? Because it also, and I was talking with Dominique about this, it also depends on your credit score. Mm-hmm. So if the rate is this, you might not actually get that rate because of your credit score. It just depends on your credit score. Mm-hmm. But what are you seeing for your rates right now for 30-year fix and a 15-year fix?
30-year fix, you're probably going to be looking in the mid to high 5s, depending upon the situation, how much you put down, what loan type you choose, FHA, conventional, USDA. 15-year fix, you're probably going to be in the high 4s. You can pay points to buy down your interest rates.
What is the cost of paying for points these days? Because I know that has gone up a little bit.
So we have a pricing grid, and usually it just all varies a lot. Okay. So what I do is, my first question to a buyer is, how long do you plan on being in this house? Oh. So if you plan on being in this house for, if they say, well, it's just going to be a starter house, I'm going to be in here for 5 years. Mm-hmm. I take a look at what the amount for the points are to buy it down, and then I divide that by how much they're saving a month, and I determine whether or not that's going to be beneficial from them or for them from a cost to payment perspective. Mm-hmm. So if they're going to be there for 7 years, if they're going to be there for 10 years, I would say typically buying down points, if you're going to be there for at least 3 to 4 years, it makes sense. And that's something I've seen, since there haven't been as many multiples sellers are offering closing costs, so you can use those closing costs to buy down your interest rate.
Oh, that's a very good point.
Yeah.
It's an excellent point. So yeah, so we are seeing that some people are now paying closing costs again, which we haven't seen for the last couple of years. So that's actually a benefit too. So buyers, if you're thinking about buying, that's another reason to get out there right now, is because we do see some help on the seller side, to pay down the closing costs, with those, any kind of closing costs. So that's a good thing too.
And you could also use that for the, upfront mortgage insurance. The seller paid closing costs could pay the upfront mortgage insurance, so you could get that lower payment.
Nice. All these little tricks to get a lower payment. So don't focus so much on interest rates all the time. Little tricks like this is why you need a professional real estate behind you. This is why you need a professional lender behind you who's been in the business for forever. Molly?
99. I started in 99.
Wow. So yes, she doesn't even look that old to do this, so that's crazy. Dominique, Joanne, do you guys have any questions?
I was gonna ask about the seller paid piece and using those divide out points,
Yep.
so you hit on that.
Mm-hmm.
Other than that, I feel like, I mean, what are some of the other levers you can pull as far as, or what should buyers be looking at when they're looking at, you can look for homes in the 275 range, because there's other things that come into play, there's taxes.
Yeah.
Could be association fees depending on if you're looking at townhomes,
Yeah.
like, how do you help people kinda hone in on that rate?
So when I get a pre-approval, I kinda, I ask if they have a property that they are interested in, so I can kinda estimate the taxes based on that property, so they're kinda in the same ballpark. And then I don't completely max out their debt to income ratios. I give a little bit of a buffer, so if they do go a little bit higher, then we have that flexibility. So I let them know, this is what you're pre-approved up to, or this is what your ideal pre-approval amount is based on what you told me for a monthly payment. If you wanna go more, generally speaking, for every $10,000, it's gonna increase your payment by about $60 a month, just general. So if somebody wants to go put an offer in on the property, it's 10,000 higher than what they were looking at, then they know the ballpark of what that's gonna change their payment, and as long as they're comfortable with it, and it's within their pre-approval amount, then we're good to go. But I usually just have them run the properties past me once they check it out and wanna put an offer in, and then I just rerun it and put everything together. We also have a program called Home Possible, which is income driven. So in the metro area, in surrounding suburbs, you can't make more than $94,200, and that has, a lower mortgage insurance premium. It has, lower interest rates, and then it has a grant affiliated with it. The grant is either $1,250 or $2,500, depending upon your income tier. And the thing that's really nice about that program, that we don't have to, like, let's say Joanne and her husband were going to buy a house, and one of them works for a company, makes $75,000 as a base plus commission, and the commission puts them over that $94,000 amount. If we can qualify them just on that $75,000 base, that's all we have to use.
Nice. So Home Possible.
Yep.
Under $94,000 a year. Includes grants, includes
Better pricing
for
mortgage insurance premium and interest rates.
Nice. So that's something to look at. So if you're thinking about buying, that's something to give us a call about, the Home Possible program.
And you don't have to be a first-time home buyer.
Ah, nice. Okay. So no, yeah, that's a really good thing to know. So again, reasons why it's nice to bring you in here. Dominique, do you got any questions?
I do. So I ran into a situation with the agent. So my client put in an offer, but it was the highest that she could go. And the agent was asking me if she could lower her down payment and possibly offer more, but she couldn't do that. Is that based on her credit score of why she couldn't lower the down payment, or what is that based upon?
So in her situation, she just doesn't make enough money. So she needed to put that 25% down, cause she had that money, in order to get her to the payment that we needed her to be at.
Okay, so it's based on like the debt to income.
Debt to income ratios, yeah.
Okay.
Yeah.
Great question, Dominique. So just
Yeah.
so you know, and I don't know if you could hear Dominique, but when lenders give an amount, it's based on your debt to income ratio. What is the debt to income ratio these days?
It's how much, well, debt to income ratio means how much money you have coming in versus how much money you have going out. So there's your front end, which is just your mortgage, and then there's your back end, which is your mortgage and all your other outstanding debt.
Yeah.
So depending upon the circumstances and the files, you know, with FHA, we can get usually an approval with 56% debt to income ratio, which is pretty high. With conventional, it can be anywhere from 43 to 50. Obviously, the lower, the better. When you run the approval, you're gonna get a better response. But it takes a look into the whole overall picture of the file. If you have money sitting in a 401k, like let's say you have $97,233 in your 401k, and your debt to income ratio is at 49%, you're probably gonna get an approval because you have that money in reserves. So when they take a look at the whole picture, it's.
Yeah. So one of the things we wanted to really kind of talk about today with the interest rates and everything and the pre-approval is to not focus so much on the interest rates. Don't focus on what's happening in the news. We really kind of say stay off the news, stay away from the news, because just because the feds are doing one thing doesn't mean the interest rates with the lenders are doing the same thing. In fact, this spring we saw that the lenders increased the interest rates prior to the feds even increasing their interest rates. And so this time the feds increased their interest rates and the lenders' interest rates actually went down. So don't get your information from the news. If you're thinking about buying, if you're thinking about selling, give us a call.
It doesn't cost anything.
Right.
It's just, it's, you can fill out an application online, or it's a 20-minute phone call where we get to know each other.
Yep, and here's the thing too, is if you have some credit issues, that's the other thing, is if you think, oh, I have credit issues, I can't buy at this time. Another reason to give us a call, because truthfully, all of us are on your side. And it doesn't mean that you have to buy tomorrow. We can help you and get you there for the next 3 months, 6 months to a year. We've worked on clients for over a year, helping people get qualified. Really stay away from those credit
Repair companies.
Yes, the credit repair companies that charge you. Molly can help you, give you ideas on how to do that without going through one of those, and it's free. And we will be there as a team to help you through it, to wait until you are ready. But really, it's not about trying to get the fastest sale. It's really about you. It's also not trying to get you to spend the most money. It really comes down to finding the right amount for you. What payment are you comfortable with? And then we look at homes according to that. What payments you're comfortable with monthly. We then look at the interest rates and what that price point will fit into there and what the taxes are. So don't worry about the interest rate so much. Let's see what fits for you this particular time, this particular day, and we can really help you out.
Yeah, and rates change regularly, and if things change, you can always refinance. But you'll be in the house that you want to be in. So
yes, and
that's another.
Yeah, we've seen that a lot this year, where we're actually helping people buy homes, because right now it's a little bit slower, so it's a good time for those buyers. So we help them get in, knowing that interest rates now may drop, and so that they can refinance. So it is still a good time to buy. So if you've been thinking about it, if you're on that fence, jump off the fence, give one of us a call, and we will be there as a team to help you through this.
Absolutely.
Anything else?
No.
All right.
At the end of the day, it's about you and what your needs are, and we're here to partner with you. So it's about you.
Yes, and for those of you that know, we all work as a team. We help each other out. So if one person's on a showing and we really work together as a team. We communicate, we talk with each other. All of us work 7 days a week. That's why we have our preferred lenders, because we know that they're going to answer their phones. We know that they're going to be able to give us pre-approvals on the weekends. So we are here for you. And that is what we pride ourselves in, is really focusing on you and helping you out. So other than that, Molly, thank you for that.
Yes,
Dominique,
thank you for having me.
Thank you for being on the computer with us. And if you have any questions, just please reach out to us, message us. Molly, Joanne, Dominique, Lisa, give us a call, reach out on Messenger, any which way, we're here for you.
Yeah.
Have a great day, everybody.
See
Thank you.
ya.